One of my tenants has two fairly big dogs. I'm a dog person myself, but how do you make sure you protect yourself if that dog were to bite someone? This is a really good question, and I think it is one that not many people have a very good understanding of. You, as the owner of the property, at the end of the day, are 100% liable for anything that occurs on that property. Now, most people mitigate this liability by getting a good insurance policy. That insurance policy is going to have a liability coverage on it, which is generally pretty inexpensive. So if you own a property, you should get the maximum amount of liability insurance that your insurance agent is willing to provide you. Sometimes that'll be 500,000. Sometimes that will be $1 million per property per policy. Do not get anything lesser than the maximum that that company is willing to offer you. And if that maximum that they're willing to offer you is less than a million, I would highly recommend that you get a umbrella policy or something else that will get you to that $1 million mark. The reason that I think that is 100% arbitrary, and it's more of a personal preference and a feeling of comfort. Another thing that is common for people to do to mitigate their liability on that particular property is by putting the property into an LLC. However, this has problems of its own. If you have a loan in your personal name, if you chose to get like a Fannie Freddie loan because it's the cheapest interest rate that you're going to get and it's the longest term loan that you can get, then they're not going to want you to have that property in the name of an LLC. They're going to want that to be in your personal name. In the event that you want to refinance, in the event that you have to send in your insurance policy on an annual basis, is going to cause some types of issues because the insurance policy has to be in the name that the property is deeded to. So if the insurance property is in your personal name, or if the property is in your personal name, the insurance policy is going to have to be in your personal name. If it's in an LLC, then the insurance policy has to be in the name of an LLC. So generally, if you are going the Fannie Freddie route, if you're going to try to get 8, 9, 10 properties on a Fannie Freddie loan, then you're going to want to keep those in your personal name, which then drives back the point of getting that umbrella policy a little bit harder, right? So making sure that you have the appropriate amount of liability insurance and the appropriate amount of coverage apart from that policy, which would be the umbrella policy. Now, the property being in the name of an LLC, in theory, what that does is it separates all of your personal belongings, all of your personal assets, and you as an individual for being personally liable to where the LLC is liable. So in the event that something happens, like a dog bites someone on your property, and you are found to be liable, then if the property is in the name of an LLC, then in theory, all they can do is take the assets that that LLC has, which is why some people are advocates of only having one property in any given LLC. That is more common on larger assets where it's like a one apartment building, one hotel, things like that. If you are like me and you are building a portfolio of single family homes, then that becomes a little bit more unrealistic. However, if you feel so inclined, you could also get an umbrella policy in the name of your LLC. And umbrella policies work in a similar way, where the umbrella policy has to be in the name of the LLC, and that umbrella policy is only good for that LLC. If you have a personal umbrella, it does not extend over your LLCs, and vice versa. If you have an umbrella policy for your LLC, it does not extend over your personal name. So that is the first layer of liability protection from this dog, is you and your personal insurance. However, the biggest kickback that you should be feeling right now is, well, it's not my dog, and I can't be there to monitor or raise that dog or help those guests be safe around that dog. So, what is then prudent is for you to require your resident, your tenant, to have a renter's insurance policy. And on this renter's insurance policy, they should have a significant amount of liability insurance. Now, it's more common for renters policies to have 100,000, 300,000, and maybe 500,000. I haven't seen many renters insurance policies have $1 million liability limits. I'm sure they're out there, but not many people are willing to pay for those, I don't think. The renter's insurance policy is going to be that second layer of protection. However, it should be very clearly understood that that renter's insurance policy may not cover something. And if that renter's insurance policy doesn't cover it, you are liable again. So it's kind of like the property is here, your insurance is here, and then the second layer is there. All of these other layers can be taken away, and you are at the bottom of it, fully liable for anything that happens. Your insurance policy that you put on this property is going to have some types of exclusions, things that they don't cover for. You should figure out what those are and kind of plan for it appropriately. The renter's insurance policy, they're going to have things that they don't cover. Someone that I know, they had a rogue inherited resident burn the house down. They had a renter's insurance policy. Well, their renter's insurance policy doesn't cover intentional damages because that's a crime, right? Well, his insurance still covered it. So he was able to, not lose any money now that he has a burnt down house. But I think that's a really good example of renter's insurance not covering something and the owner's insurance policy still being liable. I don't think that's right. And that doesn't sit well with me, right? It should go on the renter's insurance policy, not the owner's policy. The owner didn't burn the house down, right? In fact, if he did, it wouldn't be covered under his policy either. but still, I mean, these are things that, one-off is very unlikely to occur. But as you start building a portfolio of a decent number of properties, it's tough to scale. So I would make sure, especially when it comes to animals, you make sure that your insurance policy doesn't have any animal exclusions. And if it does have any animal exclusions, like if they don't allow aggressive breeds or dogs with a history of violence or biting to be on the policy, then you need to make sure with your residents that they don't have any dogs of that breed or any dogs with that history. And same for your renter's insurance policy that you require your resident to have. Now, when you require your resident to have a renter's insurance policy, I would also recommend that you get added as an additional insured. Now, what that's going to do is it's going to extend the same coverage to you on that policy. So being an additional insured and being listed as one on their policy kind of makes you like the co-owner of that policy. You're not going to be paying for it, but any liability coverage that is extended to the renter or the owner, the main owner of that policy, is also going to be extended to you as an additional insured. Now, sometimes you might get kickback on that, and they might not list you as an additional insured, in which they will list you as an additional interest. Now, as an additional interest, you don't have the same coverages under that policy as the owner does. However, you will get notified if that policy is canceled for non-payment, or if it's canceled for any other reason. You're going to get notified in the mail. So you're going to want to be on the lookout for those types of mail, because in the event that it's canceled for non-payment or whatever other reason, then you're removing a layer of protection. Outside of you having insurance, you having the appropriate legal structure for your property, and you requiring rental insurance for your resident, you can also, I know some people require like some type of pet insurance on that particular animal. That is a product that's out there. That's a product that I have no experience with, and that's a product that I wouldn't be able to give any advice on. However, it does exist. I would not let that suffice in lieu of renter's insurance, but I would consider that to be more of a third rung of protection for you. So that way, if you have these two big dogs in your property and you're worried about them, if each of them have their own little pet insurance policy and your renter has renter's insurance and you're listed as either an additional insured or an additional interest, then you should be good to go. And so long as you keep your insurance in place as well. And that is about all that you can do. I would say you should get extraordinarily familiar with the limitations of all of these insurance policies, because whether you know it or not, there's a myriad of issues that you are self-insuring right now that you might not be aware of. So you could, once you identify those, you can start, planning for them. The only other thing that I would say is pet deposits are one of those things that aren't necessarily ever going to be sufficient to do all of the damages that that pet may cause. So I'd make sure that you, in addition to collecting a pet deposit or some type of non-refundable pet fee up front, I would also collect one on a monthly basis. And then we also use a program called Rentcheck, which is like a client facing, like resident facing app where they are prompted to turn in inspection reports of their properties. And I would recommend that you do those pretty regularly, especially in properties that have some big dogs, because big dogs can do big damage real fast. And this damage can be upwards of five, six, $7,000 to repair. One of the main issues that we have with really big dogs is people keeping them in their basement, and their basement being covered in dog poop and dog urine, and getting that smell out of that porous concrete is a monumental task, one that takes a lot of time, a lot of stinky time, and a lot of stinky effort to resolve. So there's no amount of non-refundable pet fee, no amount of monthly fee that anyone would ever agree to pay to that would fully cover our exposure for that. So one of the ways that we try to limit that is by doing these regular inspections with that company called Rentcheck. So if we even get the mildest impression that they are keeping their dogs in the basement and allowing them to poop down there, then we will take some pretty immediate action steps to get that individual out of there before the problem becomes so horrible that it costs several thousands of dollars to fix. And Rent Check has allowed us to catch a couple of bad actors pretty quickly in the first couple of months. One so much as it's a larger house that we have, and we were able to get them out before they did any permanent damage. So when we got them out, the turn was just a matter of a deep clean, and then it was ready to be rented again. Whereas if that went on for any serious length of time, it would have had to have been like a full gut all over again, which would have been a massive waste of time. I hope that's helpful.